Welcome to the Transparent FX Academy. I'm Nick, and I'm a top pattern trading view with over 190k reputation points. In this video, I will be taking a pair, breaking it down from a technical and order flow perspective, and in doing so, I will provide as much free education as possible. So I really suggest that you stick to the video till the end, and I will see you on the charts. In today's video, I want to speak about CADCHF because at the moment we do have quite interesting price action and structure. Starting here on the monthly, in fact, what we can see is that we have a market which just created a strong impulse to the upside, followed by this correction. And in general, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. And if we do that, we can see how the market has just tested its zone in between the 0.618 golden ratio and 0.786 of the Fibonacci taken on this monthly impulse, which is a very strong monthly demand and support area that we expected the market to test and from here to potentially reject to the upside. Now, if we drop down on the weekly time frame, what do we see? Now, from a weekly perspective, we can see how first the market printed this M pattern. We wanted to see the completion at the neckline. That is exactly what the market did. And then we wanted to see the continuation lower for the completion of this impulse correction and impulse pattern to the downside. Again, that is exactly what the market did. And that is the most common patterns that the market creates after an M pattern. After an M pattern, usually you will see the market complete the pattern, the neckline, and then print a continuation lower, breaking below the previous low, which is what the market just did. However, it failed in closing below the previous low. It tried breaking it to the downside, going all the way down here. However, then we had the candle which closed back above, confirming this area as support, and we could expect from here more potential bullish continuation, since already on the monthly, as we have seen, everything is looking pretty bullish. If we drop down on the daily, what do we see? From a daily perspective, we can see how the market has just shifted from having daily bearish structure to now having daily bullish structure. In fact, we went from creating a series of lower lows and lower highs to now having the first higher high, and potentially at this point, we would like to see the market print a new higher low. So if we will have a correction here, potentially also to retest previous resistance and support, or at least to the 0.32 of the Fibonacci taken on this daily impulse, at that point, what we could do is look for a potential rejection to the upside and from an end for the creation of a higher low and completion of the impulse correction and impulse pattern to the upside. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data for the CAD, we can see how with the last reports, it has been growing quite a lot. We went from having 3.5k to now having 26.8k net positions with 4.9k longs added with the last report and almost 700 shorts getting closed. So the CAD has been getting quite strong. And if we go and see what we have on the CHF, CHF at the moment is getting strong as well, but is still in the negative territory with minus 5k net positions. And it's also important to keep in mind that no longs are getting added to the last report, actually longs are getting closed. So there is still the possibility for CHF weakness, and the CAD, as we have already seen, is pretty strong. So if we will have a correction to this area, how we could be approaching this potential rejection to the upside. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to a bullish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection to the upside for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and those kind of things, that is all part of the mentorship program, which you find at transparentfxtrading.com. Here you will see that you have the possibility to gain access to my entire course with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software that we have used exactly in this video, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll down past the testimonials, you will see that at the moment I'm running a massive special promotion in which not only you can join for only 97 euros, but if you open an account with the forex broker Blueberry Markets, with which I have partnered, and you open an account with them, you have the possibility to get a full refund credited back in your trading account. And if you scroll down, you will see that you have the possibility to join from here and gain automatically access with the email and password that you will create during the checkout. So definitely looking forward to have you on board. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free education analysis for all of you, and I'll see you in my next video.